I want to share today two strategies. I've tried to do this on YouTube Live before. It didn't work. I'm going to try not to do it here pre-recorded. It's going to be uploaded right after without any editing. So my apologies if parts are messy a little bit. Maybe be authentic. What I want to do here is I want to share two strategies that I use on a daily basis. We'll talk a little bit at the end why you should use one of them or why you should not use one of them. And I want to get you through both of them. One of them is the one I use when I travel more. The other one is the one I use when I'm more at home or able to watch the chart. Those are not day trading at all. They're going to be higher time frame, usually the daily chart, or a little bit lower sometimes. But I'll show you. I'll share with you exactly what happens with those and why they work. First thing I do, I look always at this. We've covered that many times here, so I won't go through all the details. Very simple. You identify zones on the weekly chart. Usually, I take the daily chart for my zones. If the zone is not clear, I'll move on the weekly chart. If I want to have the big picture and better zones, I'll go on the weekly. Makes it easier. And I know some people like wonder how to identify those zones, how to decide if it's trending or sideways. Because chart like this, a chart like this might be misleading, right? Because you don't really know what is trending. So had some range, some trends, some range, and you want to know quickly if it's sideways or trending. Now, Stein Weinstein, one of the author of a really good book about the topic, says, well, basically what he does is he uses a 30 period moving average and he plays a 30 period moving average, which is like this. If price comes, if price crosses the EMA often, sideways. If price is above the EMA for a long period, it's going to be trending upward. And if price is below the EMA for, it's going to be downtrend. So what you can see right now is that right here we've been going downward, the downtrend, until we came back here. Now we're crossing. We crossed once, twice, and back above. This is what we call sideways. That's why there's a text here, phase one, because market phase right now is phase that's much. I don't use the EMA, the moving average to trade. Just there to give me an idea sometimes of, I'm not sure, but that's pretty. So once we understand this, we have some zones. I'll put maybe videos about the topic below, but now we have the zones. What we do is we look at the zones on kind of a lower time frame, usually the daily chart. If you very simple, daily chart requires you to look at the chart only once per day, and that's it, nothing more. So we look at those zones. We have this zone right here, 87. I try to keep round numbers most of the time because it's here, and 90. Those are two zones, right? What I look for is I look for reversals. I'm more of a reversal trader. If we're gonna be in a trend, I'll look for trend continuation, but those are not gonna happen too often because of my strategy, and that's because I use the Bollinger Band. So I want to show you guys what happens with the Bollinger Band. Whenever we are trending, the Bollinger Band is gonna produce much less trade. So let's look at an example of here. Whenever we're trending downward, for example, like kind of part right. Whenever we're trending, the Bollinger Band is not gonna produce many trades because most of the time the price is gonna be below the middle band being this, and that makes us less likely to be able to enter trades. That's just a rule. Whenever we say you have to understand when your strategy works, I know that my strategy works much better when we are sideways. You know, when we have a big range. In a trend, not so much. I'm not gonna take many trades, and I'm probably gonna be on the side. But this is kind of good because Forex market is often sideways, and we have a lot of opportunities to trade anyway. So let's get back to the original. Gets to miss between the lines. When we get at those zones, I'll look for a Bollinger Band reversal. When the price breaks out of the Bollinger Band, comes back within, gives us a nice price action signal. Now, the mistakes I've made here is that whenever I was traveling, I had only one per section. Now I'm adding a little bit more, take more. But the idea is that you look for those signals at the zone. Example right here. This is an example which had a break outside the Bonjour band, strong engulfing candle to come back within. What I do is I enter below the low of the candle. What I do is I enter below the low of the candlestick, stop loss above the high. And when it comes to the take profit, I have many possibilities. And it's I don't want to say like I change my take profit all the time. I want to say that you can choose which one you want to use. You have to be consistent with it. That's the big takeaway. You can take profit and you're not consistent. If you didn't have any, as if you didn't want to make any money, wanted to. If you want to play with trading, it's fine. I keep it as a hobby, fine. But I don't want to help you guys treat it as a hobby. You have to treat it as a business. That's the. So once you have this, you can put your take profit to a fixed number. It's gonna be 2 to 1, 3 to 1. Maybe you'll take profit at 2 to 1, at 3 to 1. Kind of minimize your trade. That's fine. Works very fine. Or you can use the zones of value. So I could say, well, okay, because I have this zone, I'll put profit here. Not at the low of the zone, right? Not at the next zone. A little bit before to be. You can take some partial profit too. You get more safe. Because of course, if like you put your take profit here, you say, okay, yeah, this is my trade. I'm gonna take what is that? 6.7 for to risk. Okay, good, nice. But what is telling you that the price is gonna get? The one is telling. So if you want to make it safe, take some partial profits. Take some profit at 1 to 1 if you want to make income quick. By 2 to 1, 3 to 1, 4 to 1 if you want. Or you can use another strategy I had, which is moving take profit with the Monger band. So what I used to do is I said, okay, when we get to 2 to 1, I'll think about closing the trade. Unless we get to 2 to 1, I won't close anything. I'll just leave it as it is with this. You put this to 2 to 1. And when you see the price cross 1, what you say is what you're telling yourself is you say, if price pulls back, goes above the Monger band, close the trade. Means that all this move come, all this move right here come, you move here, and when you close here above, okay, we close above the Monger band, I'll close the trade right there. Would give you a little bit more than 2, like 2.31 of your. That's another way. But whatever way you pick, it's not the most important thing. Most important thing is going to be how consistent you are with that way. I really want to highlight this because whatever strategy we talk about today, whatever take profit method we talk about today, most important part is for you to respect it. Okay, that's now the biggest mistake you can make with this, and it's kind of the mistake I've made in the past, is to look only at one setup, like one price action setup at those. It's gonna work really, really well, but you're not gonna take me. If you want to keep it as a really part-time thing, that works fine. You're gonna take some trades. Most of this, by the way, gives me about 68% of put it here. 8% average, like not every day or every month. Average, the daily chart and the forward chart. Talk about the forward chart a little bit after, but this is what it gives me. Okay, so that's fine if you want to like take a few trades per month and have 68%. You can have some maybe drawdowns for a few. That's fine, but ideally you want to combine more setup. That's what I'm looking at. Instead of looking only at engulfing candles, I'm kind of backtesting different patterns, right? So one of them is the hammer. Find a good, but I want to find a hammer that breaks outside the Bonjour. An example of an engulfing candle again. Here's an example of a hammer, but this one is kind of too big. And that's the important part also. Pairs are gonna produce a lot of one single. So I know, for example, that the Euro USD is not gonna produce candles. Fact. But ADGPY might produce. Still doing the research right. But we still have a good hammer. Breakouts of the Montreal band. Not sure if it's hammer. I'll have to because usually a hammer is gonna be real hammer. Gonna have at least this part right here. Uh, Probably one has to be lower than one. We could do it. Look at like just calculate how big this part is. Because if you start to take hammers that are not strong, you're gonna see your rate reduce. This is like one. This is part one. Means that this part right here. Okay, this part is 1.6 times. You want to consider a hammer? So this is not a real hammer, but strategy is pretty. This right here would be a real hammer, but based on my, not sure if I would, stop loss would be pretty big. Okay, so I won't go through like all of this. This would be a better hammer. So whenever we have a hammer like this, I would be entering above the highs and doing the exact same thing. One way. This is gonna give you some trades. Sessions. You combine, the more trades you're gonna take. Yeah, that's just a fact. But the question now is, what other strategies can you use? And the other strategy I have was more kind of when I'm at home. When I'm at home. Because this one is gonna give you very, very laid back kind of only trading a one time frame, one time per day. That's pretty much. You have to be comfortable with not entering trades every day. But that's just back for every strategy. The other way I would like to think of is instead of looking only at the daily chart, I would identify the exact same zone, chart the daily chart. Then I would be doing what we call multi-time frame, multi-time frame trading, which is you pick one time frame, you trade on lower time frame. The best part about this is that you get much higher reward. Instead of having only a 2 to 1 or 1 5 to 1, you have the chance to have like 4, 5, 6 correctly. And the idea is pretty simple. Is we're gonna be on the daily chart now, and we're gonna look at those zones whenever price comes to those zones we've identified. Take an example like price is coming back to this level right here. There a possibility for us to enter on lower time frame. The key is that whenever price is near that level, you have to put in an alert. You have to have something to tell you, look at this, price is at this zone right now. Be careful. And then you have to sit at your computer a little bit more. Be able to look at your trades here. If you have any entry. So I would basically go on the forward chart, forward trading that level, go on the forward chart, would look at what happens when price comes here. I would be watching. Possible, I would even go on the 1 hour chart, be like my lowest point. 1 hour chart, I would do the exact same thing, looking at what price do when it comes to this zone. And I still keep the same, like exact same signal. Okay, engulfing candle with the Montreal band or the hammer with the exact same signal. And what I would do is I would look for trades. I would be very careful when I trade because this is lower time frame. Might react a little, or we might react a lot. This is where you have to distinguish. I would go here and I would look for. We come here, do we break outside the Montreal band, come back strong, fit in? So I want to take a trade, and we sort of have this, but I don't think third of the whole candles have this not an it's here. But as you can see, we came back. We bounced a little. Came back. You have to be kind of flexible with levels. It cannot be like just one time go and we bounce. It has to be we come back many times, bounce many. So here we didn't have many. Okay, I'm here a little bit. Kind of end this. Then we bounced a little. Then we came back. Boom, at here. Strong engulfing candle. You have to be willing to spend a few hours there. You wait a few hours. 8. I would have been able. So we arrive here. We have this engulfing candle level. Here the level. Have to be exactly at the level. It has to be near the level. So what you do is watch your chart close. Listen of the high. Stop loss below the low. Here it wouldn't be that low. Had this lower low before. I always like to keep so stop loss below the low. And then what you do here, and it's very very important, because those trades are going to be lower reliability if you win rate, and I don't know because but it's going to be lower than 60 about 68, lower than that. So the way I like to trade those, I would put my first take profit at 1-to-1. Second take profit based on my zone. As we get to 1, after trade it. After trade is like you have the profit. I leave the stop loss at the same place. These two. Price might pull back to the stop loss. Might get stopped out on this. But at least best ever we're gonna break even. Once we reach the second profit will be. So right here I would say, okay, level. Where is price likely to go? Or we might just say by this high. Or we can say we'll exit when we have an ad. That works. Say we'll exit at the next. That's supposed to pick. Be consistent with it. If you pick the zone, understand that you have to be right in you cannot just put random zone. That's a major thing. But the idea is that you get consistent with it. That either here at the next zone, the opposite setup, or just at like 3-to-1 if you want. That's possible too. If you exit the last half of your trade at 3-to-1, you get the reward to risk of pretty good. 1-to-1 and 3-to-1. That's fine. But pick whatever you want and it gives you a pretty good trade. Just see like if you were to exit right here, see how that's gonna be very, very that's the powerful part with. Guess the thing that happens is do the trade, stop loss below the low. Give us some room. First exit at 1-to-1. Right here. Did the first half of the trade. Break even. Then the second half is gonna be higher take profit. Talk about many take profit. One of them could be here, opposite up. The other one could be here. Yeah. One gives you 3-4-2. One gives you 5.65. This one, if you really want to be ambitious, give 10 everywhere. Okay, pretty good. Question is to come back. And with this kind of last possibility, out later on. So you only have basically break-even trade. Pick the reversal set. Get to your, yeah, you do reach your profit. Pick way. You also get the profit, which gives half of your trade with 1-to-1, second half with 5. But whatever way you pick, that's pretty much how it goes. So the thing I like about this strategy, get high reward. Doesn't matter if you have lower reliability or probability, you have the high reward. The other way we've talked about before, I like it because it's more. You don't have to be. You have to be watching the charts once per day. You're gonna follow many pairs, but your job is gonna be to look at the chart only once per day. Then you're done. This one is more kind of hands-on. We're gonna be trading a little. You're gonna be trading a little bit more. You're gonna be watching the chart a little bit. That's really, really important. Important to understand what you prefer and what you're able to kind of afford. If you're able to trade during the day, perfect. Charts, fine. If you're not able to trade during the day, you have a day job or if you travel, then pick the way that's more hands off, right? It's gonna make it much easier for you. Force yourself to trade during the day. It's gonna get more trouble for you. Pick the one you want. That's the big thing. Personally, right now, after having tried the 1 time per day strategy, I'm much more inclined to take that one. Much more inclined to always the same indicator, same zones. It's just a matter of adding more price action patterns. Get to understand, get to take a little bit more the same reliability. Both strategies, I've had success with them. One when I was at home, the other one when traveling. Although I was not exactly like that at up. Problem with that is that when traveling, I took the 5 trades, quite low. Hence why I'm adding right now strategies. But I want to share those with you guys today. If you appreciate this, let me know in the comment below. If you have any question though, I covered this like really quickly. I didn't have much time to do anything in preparation. Today's my birthday. I was doing this video because I didn't do it yesterday. So I hope you guys appreciate. So give it a comment. Just a quick like, I appreciate it also. Subscribe if you want to see more videos like this. There's one every single day. And I will see you guys tomorrow.